Everyone is talking for the bear market coming, but I want to do this video and I want to address my honest opinion on why I think this is wrong, and I'm gonna exactly go to the bear case and show you my argument why I think the majority of the arguments that bear market are starting are wrong, and my honest opinion about it. First of all, I'm CryptoGit, been in this space over 8 years, and now I'm documenting my journey online and showing you what works and what doesn't and everything. So first of all, one of the biggest argument that I've go to the basically what's the bear case is for example, either inflation going high, interest rates coming high, or the arguments that basically the liquidity or the money supply will have to come down. Like Michael Howell is like called the father of liquidity, like he's the one of the OG economists that basically is has been the majority of the time right about predicting where the M2 or money supply, basically this chart goes. So this chart technically show like how much money is in the world, like how much money is being printed. When this chart goes up, it's usually bullish for crypto because that kind of money actually enters on risk assets, right? So when government prints more money, currency get devalued, inflation goes up, and people rush to precious metals like gold, and usually Bitcoin too. So one of the arguments on the bear case on why bull run will end in and basically we are in bear market is this thing. They're saying that Michael Howell basically believes liquidity will go down this year. Now, I need you to understand something. First of all, I've watched many of the interviews and videos of the Michael Howell. He's very good at everything, but everyone has different opinions about the market. And I'm not saying that I'm gonna be more right than Michael Howell or I'm better or none of that stuff. I'm just sharing how I'm playing the game and my perspective. So Michael Howell believes that liquidity will go down due to the good economy that we'll have in 2025. So something that it kind of makes sense, and I agree with also him on this thing, is that usually we always think that if we have a great economy, the stock market will go up too. But honestly, that's kind of not always true, because you have to realize something. When the economy is doing great, there's no need from the Fed to incentivize the economy or to put more money into the system. And usually when Fed doesn't have a reason to put more money into the system, usually stocks and crypto can struggle because the money supply, the M2, can go down, right? But here's my counter argument to all of this, which I kind of agree it holds some weight on the right side, which I agree that if we have really great economy, sometimes it might not react on good stocks. Because, for example, Bitcoin pumped the most when Fed printed money like crazy in 2020 after the pandemic, right? When we had the pandemic, Fed, what they did like crazy QE here, and they had low rates, right? So we had basically big amounts of QE and low rates at this time. Everyone at this time panicked, while the Fed came and entered and printed money. Only in 2020, I think in that kind of year, they printed like around 30% of all US dollars in circulation at this time. And then what happened? A year later, inflation came. So the effects of the money printer are bad because sooner or later the inflation will hit. And if you check this data here, the inflation rate, it went basically, if you check on 10 years, in 2020 the inflation wasn't much, right? Look, February, January, inflation was going down. Even March, inflation was nothing. Here's when the money printer started, the big one. Like they were buying over 100 billion of assets per month. That's how inflation went. The top of crypto was somewhere here. So inflation actually went to 6.8%, right? So it's completely different than what we are seeing today. My counter argument to this idea that the liquidity will go down is this. First of all, Bitcoin is differently correlated to the money supply. Sometimes you might see period of money supply going up while Bitcoin goes down. This is basically the money supply, the yellow line, and this is a Bitcoin chart. What we have seen in the past, which is something different, is that most of the time Bitcoin can actually top earlier than the money supply. So for example, in November 2021, Bitcoin peak was here, while the money supply went a bit more higher till February 2022. And that's where basically Fed came in the game and actually raised interest rates and they stopped the QE printer, right? They stopped and they started QT, balance sheet shrinking, not expansion. For all this time, this is a balance sheet of Fed, was only going up. Check. It was only going up. So basically the top in crypto came 26 months after Fed balance sheet expansion started. So it started in September, it came top in November 2021. It's like 26 months. Now we're just started. Here's my argument why I don't believe that liquidity will go down. First of all, you have to realize that the reason why Fed in December did RMP, which is basically same as QE, but they changed a different name. I don't want to enter into the topic is QE or not, because it's a long thing. You have to realize that even last time when QE started here, when QE started somewhere here, people had no idea what QE was. Everyone understood QE when we were at the top. So same right now. Fed plays the game in a smart way. They're not dumb to actually tell you we're gonna do QE, because they know that QE brings inflation and they know that QE pumps risk assets like crazy. And everyone know that if QE starts, we buy, right? But this is a broad term. Every kid knows what QE is and what QE does. So what Fed actually does this time, they change the term from QE to RMP. RMP is basically, they change it and they call it reverse management purchases, I think so. So they changed the term, and now in December they told that they're buying 40 billion assets per month. Now, here's what many people don't get. When they did this in December, something broke, which was mostly about banks. Banks were basically not in the good positions because they didn't have much free extra liquidity, because interest rates had been high for so long, and actually the QT, basically the balance sheet shrinking, actually affected a lot the markets, because when QT occurs, Fed doesn't put more money into the system. That's why banks struggle. So the reason why I don't believe that liquidity will go down is for the reason that I believe Fed will continue to increase the balance sheet, because as I said, if there wasn't a crisis, they wouldn't even start the QE, but they already did it. So we have never seen a bear market coming when the Fed balance sheet expansion just started. So, for example, check 2018, Fed balance sheet went down, like we didn't saw a bear market here. Look where we are right now. Let's go to the 5-year, for example. Right now looks like we're at the bottom, and that's when basically December started for RMP. Looks like we're at the bottom and this chart will go up. And Fed announced that RMP will be around till April. So till April, these charts can go up. It might not go up immediately, but we might also see small consolidations like this. But my point is that we are at the bottom, and looking at this is like buying at this time. That's what the Fed balance sheet talks. It's not me saying that. So my argument that liquidity will go down is that it might come true, don't get me wrong, but you have always to think about what I told you, and you have always to think about what happened last time. The reason why last time, this is global liquidity, the reason why the global liquidity went down, so it collapsed here, right, was because inflation was going high and balance sheet expansion ran for 26 months. So at this time we had high inflation plus Fed printing money, right? So we had low rates, Fed printing money, and we had high inflation. Like, printing money started 2020. They were printing money for over 1 year. Interest rates came at zero somewhere here. They were at 1%, 2% for over 1 year. Right now we have just started lowering the rates and just the balance sheet expansion, and we have low inflation. So the reason why I can't think how the basically M2 money supply will top is because there are more incentives for them to print money rather than to shrink the balance sheet and send everything down. One of the reasons is Senate elections. Like, Trump has been clear that he wants to run the economy hot because he doesn't want to get impeached. Like he said in a video a few weeks ago, and he said that, look, if I don't win the Senate elections, I can probably get impeached. So my reasons for going up is that, first of all, we come from a balance sheet contraction and not expansion. So if this thing were going up, I would kind of agree with Michael Howell that liquidity will go down, because we probably had high inflation, and we probably had too much balance sheet expansion that maybe it need to come down. So you have to realize that the thing with Michael Howell plan is that everything will go so smooth. Like, I don't think everything will go so smooth, because Europe has problems, US has problems, Japanese government has many problems. Like, all countries worldwide will be forced to print. Like, the thing is like this. Today we have no inflation, we have no low rates, and we just started the balance sheet expansion. Another thing that you gotta see is the business cycle. Let me tell you this, which is a very important thing. This is United States ISM manufacturing PMI, meaning that when this number is above 50, it means that businesses are expanding. When it goes lower than 50, it means businesses are contracting. Why this is very important? Because this shows how the economy is doing. So you have to realize something. In 2021, the alt season always started somewhere here. Like, alt season always starts when business PMI is above 55. Right now, business PMI before January 2026 was down for 3.5 years. Can you imagine how crazy it was, guys? 3.5 years only it went down, and it came up only this time. And if you check the forecast, it's showing that business cycle should be somewhere in 54, 55 by after summer. Again, this is a forecast. We don't know if it's going to be true. But my point is like this. Check this data. Alt season has always started when this number was above 55. And right now we just go to 52. And there has always been a period of 1 year or 365 days upside once PMI broke up. So for example, when we had, let's say, for example, the first spike at 52 that we had last time, and it went up only, was in June 2020. The top was November 2021. It's more than 1 year of time for crypto to run, and right now we are just here. So based on this data, we have 1 more year at least to run. That's what happened last time, because as I said, we don't have high inflation. If we had high inflation, I would tell, yeah, maybe Fed would look to hike interest rates, but there's no reason for Fed to hike interest rates. Interest rates, like, one of the fears that I see a lot of people talking is inflation going up and interest rates going up. You have to realize that why interest rates goes up. Interest rates goes up when there's too much money into the system and there's inflation. Today you don't have inflation. Look at this data. Inflation is just going sideways. And you have to understand also something. The top on crypto have 11 months gap after inflation goes up, and you still can make money. Because here's the reality. In February 2021, we had 1.7 inflation, right? In November 2021, when crypto came, it was 6.8. But we already run for 10, 11 months with inflation up and crypto went up. So even if inflation goes up, let's say, I don't know, in March, you still got at least 10 months of movements that can come to crypto and send everything to the moon. Like, I can't know what inflation will be. No one knows what inflation will be. But still, even if it goes month in a row up, we still have to calculate that we have 10 to 11 months like last time. Because always governments come late. They don't come at the right time. So my point is like this. You have to realize that I'm not saying Michael Howell will be wrong. I'm saying that the political incentive is to run the economy hot and to satisfy the Wall Street and the Main Street. If you don't satisfy the Wall Street and the Main Street, you basically lose political power, right? And Trump got Senate elections in November. Now, he might lose it. Anything can happen. But you have to realize that even if Trump loses the Senate election, at least he will try to pump the economy. And in my own opinion, that try is more than actually enough. So this idea that liquidity will go down because the economy will do well, I think it doesn't hold weight at this time, because we don't have inflation. So there's more motive to print more money. We have big struggles, like banks are struggling, so they need to be bailed out. For example, this month we had the first US bank failure in Chicago. That's a sign that banks need liquidity, right? And if inflation was up, if Fed balance sheet expansion was going for, actually more than 1 year and we were somewhere like this, I would say, yeah, that might make sense. But today, I don't think that's the scenario that we need to play out. And you have to realize something. There's always a first time for crypto. Because when I was telling people to buy crypto in 2022 and 2023, you know what people were telling? You know, all economists and all financials guys were telling? So at this time, 2022 to 2023, we had QT and high rates, which is completely the opposite of actually crypto pumping, because crypto has always pumped in the environment with lower, with zero interest rates and QE. This was the first time that we saw crypto pumping with QE and high rates. All the economists at this time were saying that how you can buy crypto, you're dumb. Like Fed is shrinking the balance sheet and we have higher rates. That's why we went up. Everyone got wrong. So even this time, I do believe that crypto can move in a different way and shock everyone. And again, that's how I think, and I play the game in a probable way. I don't expect you to agree with me, but I show you what the data shows and not what I want. And my perspective is like this: even if I'm wrong, listen to me this very carefully, even if I'm wrong and we enter in a bear market and liquidity goes down, because there's a chance. First of all, the risk to reward ratio in crypto makes no sense for me to live. And I think for the majority of you, it might be the same, because you have to understand something. First of all, you have to realize that the majority of alts are down. Like everything is down like 70-80%. For example, you got Ethereum, the second biggest crypto, you got it 5 years down. Can you imagine? Like you're down on Ethereum, let me take at the top, you're down 56%. On the majority of the alts, you would be probably down, let's say 80 to 85% or 70, it depends, everyone is different, but on average, everyone is 80% down, right? On average, I'm just talking a number. So here's my perspective, how I think about the market. So you have to learn how to position how to position yourself in a situation that you basically end up in a win-win strategy. That's what I try to teach people. So here's the thing. For example, if you're an alt that is 80% down and you believe that the market will continue to go down, right? You believe that Bitcoin can probably touch 49K, which again, it might happen. I'm not saying I'm going to be right all the time. It might happen. So if you believe that, it means that your alt will crash more. It can go to probably 95 and all this kind of stuff. You'd be like, let me try to sell because I predict that it can come down. The reason why I don't play that game is because of this. Like, you have to realize something. The majority of you need to understand that, let's say, this is the chart. Let me remove all the drawings so I explain quite better. Let's say this is the chart, right? And this is the upside to a coin. I want to go a bit longer so I can show it to you. So the upside is this. Now, let's say the upside is 50x for your alt, right? Let me make it a bit larger. So we are here, let's say at this stage right now. We're somewhere here, right? So you're 80% down and there's more room to go down. The reason why what people don't calculate is that the upside, it's something that you can't risk to miss. And this is something that you need to aim for. Where is that thing that you can make it like a bar? Yeah. So this is your upside. Let me make it in, or it's okay. So this is your upside and this is your downside. So basically, if you're actually right, you'll probably capture a bit more money. If you're wrong, you'll miss a 50x. So even here's how I think. Even if I'm wrong, right, and market collapses a bit more, I just buy more because I can't afford to miss those kinds of gains. That's the game I'm playing. So I always tell to people, I'm staying bullish because my biggest risk in crypto is not losing my money, is losing the opportunity to actually achieve life-changing wealth. And the gains that you probably have on many altcoins are like crazy. Like you're on coins that got like 50x potential. So my thing is like this. if you consider the risk in crypto to lose all your money, I think you have a big mindset problem, because on everything in life we take a risk, right? So we can lose money. We open a business, we can lose all the money. We invest in stocks, we can lose all the money. You're in a job today, you feel safe, you can be tomorrow fired and lose all your money. So we have been used to losing money. What we haven't been used, it's a gain that you can never achieve in any area in life, like where you can do a 50x. Show me an industry. So that's how I play the game. Even if I'm wrong, I'm still gonna wait and buy more. I'm not looking to sell. So if you come to me and tell that you're wrong, I'm still gonna wait and buy this thing, because as I said, my biggest risk is missing the gains that can change your life, not trying to actually be right a bit because you want to fulfill your ego. Like, it's about making money, not trying to be right. And Jeff Bezos has a really amazing quote, and you can Google this. He said that if you have 10% chance to 100x your wealth, you should take that bet every single time. And the majority of us are on altcoins that got more than 50% of chances to do more than 20x, more than 50x. But we just try to capture this thing while we can miss this thing. So try to be right on the moves that matters the most. That's what I would tell you. So even if I'm wrong on this, which I can be, I'll still try to position myself in a win-win scenario. I might lose short term. I might lose, let's say, if markets take till 2027, I might lose for the whole 2026. But I don't care if in 2027 I'm going to make a 50x. So that's the mindset that I have, and that's how I operate. If you don't agree with this, it's your choice. But I'm showing you with facts what makes sense. Because, as I said, show me an industry you can do a 50x. Without doing anything, with just being patient within 2 or 3 years. Like, go and ask ChatGPT what's the average time frame to 50x your investment or 20x. Ask ChatGPT, they'll tell you that it's probably 7 years. So even if the market has been brutal since 2022, as I said, you are on gains that you can change your life, and all you need to be is patient, and all you need is just one of those gains to change your life. Like, how many people, I know a ton of people that from 2021 they just captured one coin that did crazy numbers and they're set for life. So you just need to be right one time. Again, you might feel wrong for a few years and you could have probably made better decisions, but if you capture this thing, you'll be set for life. So as I said, try to position yourself in a win-win scenario. That's why I kind of went into the argument why I believe the bear case here is not right and I'm bullish. And even if I'm wrong, which again, it can totally happen, maybe something breaks, I don't know. But still, even if something breaks, you'll know that the money print will be turned on. But anyway, my point is that even if something breaks and we go down and crypto enters a bear market and we touch this level, the risk to reward ratio makes no sense for me to sell. That's how I operate, that's how I think. And I need you to understand how I operate and how I think, so you understand my moves. And I think that's the best approach, because I know a lot of people try to be right and be like, yeah, at least let me make some quick money here. And then when the bear market is confirmed, we go up only. Because you have to realize that even last time, for example, so the average dips of every bull run was like 40%, 35% in the past. Like, for example, check this thing was like 40. Last time in 2021, we dipped 56% here. So this was the first time that we had the 56% dip, and then the market came in making all-time high. Everyone called here for the bear market, everyone at this time, because they didn't saw a 56% dip. And still we made a new all-time high that year. So even this time, I wouldn't be surprised, let me remove all the drawings, I wouldn't be surprised if Bitcoin dips, let me do it here, if Bitcoin dips, let's say, till 55 and still goes to a new all-time high by the end of the year. It happened last time. Everyone said it was over, and guess what? It happened. So maybe I would say the invalidation that we're wrong and we're in bear market is if we dip under 56%. But again, still you can't call it properly, because as I said, even last time you were not used to a 56% dip and then it came. So even this time, maybe it invalidates that and goes 60, and that's the bottom. Everyone calls bear market, that's the bottom. Because when you realize, when 80% of people call bear market, that's usually the bottom. Everyone confirmed bear market on FTX collapse here. at 20k. We had a small dip and then it was up only. That's why I'm saying that it's hard to predict tops and bottoms. That's why you need to position yourself in a strategy that even if you're wrong, you're still on the path to not miss the gains that crypto can provide. Like, the biggest risk in your mind should be to not risk to miss the gains, not money, because money, as I said, we have been used to it and it's not something new. So that's how I operate. I want to be brutally honest with you. That's why I want to share this video. And don't forget to join my free Telegram. I'll leave the link below. I'll share daily voice notes and updates. And I hope you enjoyed and I hope you learned. And don't forget to subscribe for more.